Welcome back. We are on countdown mode. We're about 6 minutes away from big data coming out, the PCE and the GDP. Take a look at futures. Dow Industrials down 42, NASDAQ right now down 22. Big tech stocks this morning. After a brief rally earlier in the week, investors still worried about AI valuations and AI disruptions in terms of disrupting their businesses. Big tech this morning, mixed. Apple, Alphabet, Microsoft lower at the end of trading yesterday. Nvidia reportedly close to finalizing a $30 billion investment with OpenAI as part of its next fundraising round. In return, OpenAI will purchase Nvidia chips for its training and AI models. The deal would value the ChatGPT maker at around $830 billion. Nvidia is reporting next week on Wednesday, and we want to talk about that and look ahead. And joining me right now to do just that, John Lonsky with us right now. John, Nvidia is going to be reporting on Wednesday, I suspect. This is going to be the big earnings report of the week. And I want to get your take on this because Nvidia's largest customers are Meta, Microsoft, Amazon, and Google, and they're spending a combined $650 billion on CapEx in 2026 for data center build-outs. Your thoughts on the Nvidia quarter coming up on Wednesday?
Well, $650 billion of spending on AI can only be a positive for Nvidia going forward. I guess the only worry investors might have regarding Nvidia is, whether or not we're going to stay to schedule as far as the build out of artificial intelligence is concerned. I mean, with the data centers, you got to worry about issues pertaining to power, electric power, water, skilled labor, and so on. But the outlook for AI going forward is still positive, though, again, investors have some questions as to whether or not all this spending is going to deliver adequate returns.
Yeah, it's true. And of course, we are watching the worries over all of this spending and whether or not we are looking at companies spending money on data centers and actually borrowing the money. Not the hyperscalers, obviously, not the major customers of Nvidia. But joining me right now is Strategas founder and chairman, the CEO of Strategas, Jason Trennert. Jason, great to see you. Thank you so much for being here. Welcome back. Give us your sense of markets today. What is driving your direction in terms of allocating capital and what you think is most important in terms of research as we await this economic data this morning?
Well, I have to tell you, Maria, the most important thing we're watching is the 10-year yield, because I think a quiescent 10-year yield, something below 450, allows the market to not only grow, but also to change leadership. And you've seen that. So you've seen a change in leadership without the market going down substantially. The market's flat, but there have been other pockets of strength. And we think that's a good thing. I think that broadens out the market a bit. Obviously, it's still very concentrated in some of the software names, so concentrated in many of the Mag 7 names, but it's broadening out, and I think that's a very good sign. And that wouldn't happen, in my opinion, given the leverage in the system, if the 10-year Treasury weren't where it is today.
Yeah, let's take a look at the 10-year this morning because interest rates are hanging out right at about 4.0% on the 10-year right now. Jason, we're waiting on the first read of fourth quarter GDP. It is out in about 2 minutes' time. We're expecting growth of 3% for the fourth quarter. And then we are looking at the yield down right now, 1.5 basis points at 4.06%. We will also get the December PCE index. That's coming out as well. Economists there expecting an increase of 0.3%. 2.8% year over year. Jason, we've got the President's State of the Union address on Tuesday night. No doubt he is going to talk about economic growth, growth in wages, and inflation coming in as the president has focused on reining in costs for American citizens. What are your expectations?
Yeah, well, I would just say that one of the very good things that's come out of Kevin Warsh's ascendancy to Fed chair is that there's been a lot of discussion about the idea that growth does not cause inflation. Inflation is caused by other things, a lot of times excess government spending, excess money supply, and it can be controlled. So you can have a situation with supply side incentives like President Trump has provided in the One Big Beautiful Bill, where you get growth and you get pretty low inflation. And I think that's a very good expectation, because you're going to get big productivity gains, in our opinion, from the one big beautiful bill. There are massive incentives in there for capital spending, and particularly in an age of AI, that should increase productivity, should increase profit margins and profits. So in my view, I'm more interested in the PCE in a way than I am in the GDP number.
Yeah, and we're waiting on that PCE right now because, of course, that is also perhaps going to dictate the Federal Reserve in terms of how many rate cuts we see this year. So I'm watching markets here with futures now flat, down just 12 points as these numbers are about to hit the tape. And we're going to get to Cheryl in a moment. And bond yields are also on the move. GDP and PCE right now with Cheryl Casoni. Over to you, Cheryl.
Well, I'm still getting some of this data flowing in, Maria, but I got to start with the GDP read. This is the first reading of fourth quarter GDP. We came in at 1.4%. This is even below the range of expectations that we got for fourth quarter GDP. The expectation was 3%. We came in at 1.4%. We were just looking here in the studio at Atlanta GDP Now, which is sitting at 3%. I do want to add, though, again, as you know, this was the shutdown. We had a 43-day government shutdown in this quarter. That is certainly going to be one of the issues here. Now, let's go back to what we're seeing as with regards to the other pieces of data, Maria. Let me give you personal income. That came in at 0.3%. That is in line with expectations. Spending, 0.4%. That is consumption. That is in line with expectations. Now let me get into the PCE numbers right now. The PCE index, the actual was a gain of 0.4%. The expectation was a gain of 0.3%. Jason was just saying that that was one of the critical numbers that he was looking at there in that data. As for the rest of it, within the PCE price index, if you strip out like food, energy, housing, you see that 2.8% number that was on target with regards to the estimates that we were getting. The personal savings rate coming in at 3.6%. And again, that core number coming in 0.4%. The estimate was for a gain of 0.3%. So a little bit hotter than expected here with regards to the PCE price index. But again, with that 2.9%, that year-over-year number, that's just slightly above what we were looking for, Maria. So again, pretty in line right now with what we were expecting as far as PCE income and spending. The surprise, as I just gave to you, was that first read on fourth quarter GDP with the caveat of the shutdown, Maria.
Yeah, all very important information, Cheryl. Thank you for that analysis. And Jason, I got to get your take here because the growth is obviously a lot slower than we expected, but it's a noisy quarter because of the shutdown. And that's what the Democrats want to see, which is why we're in a partial shutdown again with the Department of Homeland Security. Your thoughts?
Yeah, listen, I just find it hard, Maria. Corporate profits are up about 13%. S&P 500 companies have largely reported. They're up 13% for the fourth quarter. Profit margins are hitting a new high. So I have to say I'm a little skeptical. And of course, the GDP numbers are subject to revision. And as you pointed out, it's during a shutdown, government shutdown. Yeah. So I have to say, if you're an investor, I wouldn't worry too much about these numbers. I would be much more focused on earnings. Now, of course, if they came in hot, I'd probably say you should focus on the GDP number. But I truly believe that the fourth quarter earnings are a better indicator of the way the economy is going than these very processed government numbers that we have.
I mean, I'm skeptical, too, because you had a close to 5% number just a few months ago, and now you're talking about 1.4%. You know, markets are on the move. The Dow is down 115. But if you have a slower economy and you have wouldn't that indicate that the Fed would want to lower interest rates, although the PCE being hotter than expected, perhaps it changes the Fed's directory? What does this say to the Fed in terms of rate cuts, Jason?
It's a great question, and of course there's going to be new leadership, and I think again there's going to be more, not to get too technical about this, but there may be more of a focus on the balance sheet rather than rates. And
Yeah.
there's of course a connection, but it's not perfect connection. And I think it's I think it's well in time that we do that. That I think we should lower rates, but also maybe tighten up the balance sheet a bit too.
Right, and that's something Scott Bessent has written about quite a bit, our Treasury Secretary.
Absolutely.
Jason, great to see you as always. Thank you, sir. Jason Trennert this morning
Thank you,
on the
Maria.
data of the
Appreciate
morning, and we will see you soon. I appreciate you. Tiana Low-Desher, thank you very much for being here. John Lonsky, always a pleasure to see you both. Thank you to this great panel. We'll be right back with Marty McCary, FDA Commissioner.